Zimbabwe's economy has shown signs of recovery in the first half of this year so far. But when you look at the fundamentals that are driving this rebound, such as the improved agricultural output, record high gold prices right now, is there any confidence that this growth is sustainable?
Well, when you look at our growth performance, it's always been affected by the agricultural sector. So in those years when our economy has been, when we've had a drought, that has affected overall economic growth. So I would say Zimbabwe is one of the countries that has been worst affected by climate-induced shocks. So even when you read the Article 4 report by the IMF on Zimbabwe, they're actually saying that the outlook, growth is expected to slow down in the medium term to probably around 3%. So yes, we're happy that this year there has been a rebound, but our biggest challenge, even in the past, has been sustaining high growth over time. For example, when you look at the past 10 years, economic growth in Zimbabwe has averaged just under 3%, which is grossly inadequate given the huge structural challenges that we're actually facing.
And of course, there's still other significant concerns, not just the agricultural sector. There are concerns about mounting domestic debt. In fact, nearly $600 million in domestic arrears were accumulated in 2024. There's also limited access to official external financing channels. You have low reserve buffers as well. We just talked about the ZiG currency. Has there been any substantial momentum from the government when it comes to implementing the reforms that are needed to address these challenges?
Yeah, so on the macroeconomic policy front, we've seen some significant gains and improvements in terms of the tightening of the monetary policy, for example. So I think that's a big plus. But we still need to ensure that we continue to tighten things on the fiscal policy front, especially addressing the issue of non-productive spending and also enhancing inefficiencies in public investments. So that's one of the areas that the IMF has also highlighted. We have not made significant progress in terms of institutional reforms in general, including anti-corruption reforms. So I think there are a number of areas, especially around institutions, that we need to address, including reforming the doing business environment. Of course, government has already started doing that, but we need to see more reforms, especially around the tax regime, because households and the private sector, businesses have been complaining about the huge tax burden, which is eroding competitiveness in Zimbabwe. So I think, yes, we're on the right track, but I think there's still a lot that we need to do, especially in terms of also unlocking capital inflows into the country. The risk premium, the country risk premium still remains on the high side. So we need to address that through expediting the implementation of key institutional governance reforms, because that's critical in terms of restoration of confidence in the Zimbabwean economy.
And of course, a huge part of Zimbabwe's economic struggles has to do with its international relations. Has there been any progress in getting its debt restructured under the G20 Common Framework? We know you've been talking to your neighbor South Africa about that. Has there been any progress in resetting international relations as it tries to get sanctions lifted?
No, there hasn't been much progress in my view, and I think that's really down to the tardiness in terms of implementation of some of the agreed upon reforms, especially in terms of governance and also in terms of key institutions. But also the fact that the economy has not been growing fast enough has not helped matters, because ultimately the best way of addressing the debt situation is to make sure that we are growing very, very fast. At least if we can grow by, on average, 10% per year, that will help in terms of ensuring that there is sustainability in terms of our debt position. So there's not much progress. We continue to accrue arrears, not just in terms of domestic debt, but also in terms of external debt.
Surely there are a few bright lights, because we're just talking earlier about the ZiG currency. It has mostly remained stable against the dollar, still used 40%. It's used 40% in the country compared to the dollar, if that makes sense. We still see it overshadowed, though, by the widespread use of the dollar in Zimbabwe. What is the outlook for the currency? Has there been any progress in closing that gap between the official and the parallel foreign exchange market?
Yeah, so we have seen some measure of short-term stability, as evidenced by the low and stable monthly inflation numbers. But the annual inflation numbers, which are an indicator of long-term sustainability and stability, are still on the high side, because we're hoping that probably by end of this year, we should be able to maybe make a significant impact in terms of reducing the annual inflation numbers. So obviously that has also affected confidence in the usage of the ZiG by economic agents, because the tightening of the monetary policy has also not helped matters. Government is yet to announce a roadmap in terms of the current reforms. They've said that that's going to be announced when they unveil or start implementing the National Development Strategy #2, which will be implemented next year for at least for the next 5 years, because the current development strategy, the NDS1, is coming to an end this year. But one of the biggest challenges has been the traumas that people still have on account of the past chronic high inflationary and hyperinflationary episodes that we've actually experienced. So my view is that even after addressing the macroeconomic fundamentals, I think it's still going to take a bit of time for economic agents, for Zimbabweans, to have confidence and trust in the ZiG, but also even in key economic institutions.
Well, Doctor, certainly cautiously optimistic there. As always, thank you so much for those great insights.